All right, today we're going to talk about closing single options, delta versus theta. I had a question I ran into where somebody's wondering, do I close this option contract if the theta is high or based on the delta? It's more complicated than that. So I cover a lot of things in my coaching, mentoring, group sessions when we're dealing with this. However, these questions usually come from people that are just trading single option contracts. So here John writes in, pretty new to this, when theta is greater than delta, it's time to cut your losses, isn't it? So that depends. First off, there's not enough information here. Are we buying options? Are we selling options? Are we buying a single call? Are we buying a single put? Because then now you've got a negative theta or positive theta. So that's also different. I'm assuming, because most people are doing this at the basic level, and I just stumbled upon this. It's not like a coaching or mentoring student. I'm assuming that we are buying a single option contract in this case, and it's going to be a call contract. So that's what I'm looking at. So the question comes down to is when theta is greater than delta, is it time to cut your losses? Not really. Not really. It depends. So let's say I buy a AMD single option right here. I buy a single call. I can just go to a single and I can analyze this position. So, and we can get rid of some of the other items here. Well, take a look. Right now, we've got a theta that is smaller than our delta. And in this case, you might say, yeah, we're okay. We're not, it's not a problem. Okay. However, there are times when that theta is bigger than the delta. And that's what he's saying is that, do we cut that position? So you can play with this a little bit. And what you'll find is that in some cases, you'll be able to see that the theta, is kind of right here, neck and neck in this case. With that, and you might say, is it time to cut it? And it's not always the case because it depends how that position is structured and what you're doing. Like here in this case, I've got a theta that's bigger than the delta. And you might say, well, should I cut this position now? And no, because in this case, I might just be putting on this position. You might say, well, why the heck are you putting on a position like this? It's way out of the money. Well, what if I'm financing it also with a put spread? So let's say here I'm buying a call for 96. However, I might also finance it with a put. And now I've got right here a financed option position, and my theta now got cut down to now +4, and now I've got this delta. So in fact, as I look into this, it may not be, because when I'm looking at a single option, yeah, that could be the case in some situations, but no, I might put this on right now, and then I'm thinking in the long haul. I'm thinking multiples moves ahead. So what's my next move? So the first move is this, right? Think of it like chess or checkers. Think multiple steps ahead. The first move is this. And yes, my theta is greater than my delta. But if this continues to go down against me, I'm going to finance it right here with this put option. And maybe by then it won't be worth as much. It might be like this. And now I'm financing it maybe even with 2 of these, and I'm good to go. And it doesn't matter. And now, as long as that stock kind of stays stable right here, I'm fine. I'm still going to be profitable. So the point being here is that when we look at questions like this, you got to really recognize most people are looking at things at a single linear way. And when we're looking at things that way, you're not really thinking about trading properly, because you're thinking about it in a one faceted way, like a lottery ticket, where I get a lottery ticket, I win a big chunk of money. Trading is much more dynamic. It's organic. It's living, breathing. You're constantly evolving and developing trades. You're moving in and out of trades. It's fluid, just like water. So if we look at something like this, when theta is greater than delta, it's time to cut your losses. Depends. And that question is very difficult to answer because it depends on the strategy. So what's important to really know and recognize is there's a lot more depth of learning here to go with, because it's not as easy to answer as that. So just recognize, what is the next move after that? So if you do cut it, you're probably just thinking like this, where it's a one-time single kind of move or area. And even if you go with, let's say, a bigger stock, just to show you this other concept or example, let's say we're going here and I'm buying this option contract. Well, this I'm buying right at the money, and my theta is -84, but my delta is 51. So depending on the stock, I might not even need to move around, and my theta is already greater than my delta. and I'm just starting out the position. So in this case, why would you cut it? So point being is, you have to really understand options first. But that is probably not a valid reason to cut the position, because there's more information needed, and you can't look at it just like that. You have to look at, well, what was the initial position? How is it behaving? What's my next step? There's many more facets to it. So I hope that helps, opens your brain up a little, and gives you a little insight. So thanks for joining me. Grab some worksheets if you want, and check out some of the webinars, worksheets, workshops as well that we might be having soon, because there's a lot of smart people in our group and community. And yeah, we've got some cool group coaching and mentoring also that I do, and work with people such as some very highly intelligent traders. So thanks for joining me. Check out the website for more information. I will see you next time. Take care.